Shh.
Very.
Shh. Stop asking me. Stop asking me, Jay.
Sorry. I didn't
Don't
bring
give
it
on
up.
Blue's
Sorry.
Clues. You know what I mean? Anyway, I usually have my camera on. Catch me in garments, including but not limited to aubergine hoodies, especially when comfortable back in the flatty money. But we've not been in the flatty manor because we've been in the office in Solana, aren't we, lads? That's where we're checking in live. Elizabeth, J, Cornell, you know the vibes. Okay, so welcome to the absolutely nothing to do with financial advice show called Technically Speaking. Right? Sometimes I have to start the show off a bit silly because some people think I'm a financial advisor. What I'm going to do is I am going to do the intro and then I'm going to bounce back to the secret operation. All right. So, dun, 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 dun. For those who haven't been here before, this is Technically Speaking. This is a free weekly webinar. We've been running every single Sunday, 8 p.m. till 9 p.m., focused on charts, trading, and investing and technical analysis for quite a while now. Today's a Bit Blonde and Jay Johnson special. Bit Blonde's going to go first, ladies first, of course. If you don't know who we are, Blockchain Sensei, we're a Black and Asian owned Web3 solutions and financial literacy company. And if you click the link in our bio, it will bring you to everything and anything you need, including but not limited to our Dojo subscription service, free Telegram, free WhatsApp. Let me get into the disclaimer, and then Dubham's going to quickly tell you why you guys need to be in the dojo, and then we'll go over to Bit Blonde, and then Jay Johnson will finish with a Swiss Army knife. Does that sound good? Hope that sounds good. Let's get it. Okay, disclaimer, terms and conditions. All content is for education, information, and entertainment purposes only. And it should. Gonna go back to back, Jay, or you want me to do a solo one? Cornell, you gonna spit some bars?
I'll let you do a solo one just because, we don't have you for long. Do you want to spit some bars, now?
Let's go. Let's freestyle, baby. Ninja, you
All right,
first.
we'll go back to back. Just me and Cornell. Let's go. Jay, you can do
Do
the
it, man.
beatbox if you want. 3, 2, 1. Yo, disclaimer.
All
Terms and
content is for
conditions.
education.
All content is for education and information and entertainment purposes only. Cornell.
Should not be considered as investment advice or a recommendation to buy, sell, hold any assets or place any trades. Please do your own research. Our content is intended and should only be used for informational use. It's very important to do your own analysis before making any investment with. Should be based on your individual circumstances. You should always take independent professional advice from a professional advisor or independently research and verify all and any information and may find on your show that you wish to rely upon. Dude, I'm messing this up hard.
When you wish to make an investment decision, or otherwise, all investments come with what, guys?
All investments come with risk. Please do your research.
Risk.
We are not financial advisors,
No,
and
sir.
do not intend to be perceived or received as financial advisors. Are you a financial advisor, Jay?
I'm not a financial advisor.
No, it's not. However, we are working in collaboration with several accredited advisors. If you are unable to mitigate your risk, then please contact us immediately so we can refer you to an accredited financial advisor. Let's go, baby.
Yeah, let me just make sure everything's working on YouTube. Guys, no. Wait, low one. Cornell, you gonna spit some bars? Terms and conditions. All content is for education and fun. Yo, disclaimer. Terms and conditions. All content is for. All right, cool, amazing. I think that's working.
Wait, did you hear Cornell's voice?
I'm pretty sure we did. One sec. Let's check it. Wait, say test. One sec. I'm pretty sure we did. One sec.
Test.
Check it. Wait, say test. One sec. Pretty sure we did. Wait, say test. Oh my God! What? No, this can't be real life.
So I don't think anyone else's mic is being recorded, but yeah, I'm sure you'll be able to.
This can't be happening.
Do you know what will happen? I'll just go through the because Cornell did most of that disclaimer. I'll go through it again. I'll just get this up on here. But I'll let you figure that in the meantime.
Wait, one sec. Let me make sure everything's working on the YouTube. Wait. Let me add this to the stage again. Add to the stage.
Yeah. 1, 2.
Share.
I'll just keep chatting so
Wait.
you can. Who would have thunk
Share. And then Jay, you are now the host.
Okay, perhaps only the host can speak. We'll be getting started very soon.
All right, cool. I think your microphone's working. I'm gonna test you on the YouTube, yeah?
Cool. Let's do that. We got Colin here as well. Come on. Let's get it.
Colin is a crazy motherfucker. He's been about since before Bitcoin was Bitcoin, like doing blockchain shit. That guy is OG.
Big facts. Okay. Yeah, we'll be getting started very soon. Let me know if you can hear me. I'll go through the disclaimer in just a regular voice. I think you guys already got all the creativity from Fadlan. All right, cool. Looks like YouTube is working. It's been tested. So you guys should be able to hear me loud and clear. So here is our disclaimer and terms and conditions. All content is for education, information, and entertainment purposes only and should not be considered as investment advice or a recommendation to buy, sell, hold any assets or place any trades. Please do your own research. Our content is intended and should only be used for informational use only. It is very important you do your own analysis before making any investments, which should be based on your own individual circumstances. You should always take independent professional advice from a professional advisor or independently research and verify all and any information you may find on our show that you may wish to rely upon, whether you wish to make an investment decision or otherwise. All investments come with risks, so please do your own research. We are not financial advisors and do not intend to be perceived or received as financial advisors. However, we are working in collaboration with several accredited advisors. So if you are unable to mitigate your risk, then please contact us immediately so we can refer you to an accredited financial advisor. Great stuff. I guess we can get it cracking. I think Badlands had to jet. Would you like to go first, BitBlonde?
Yeah, guys, GM, let's go. I'm gonna do a quick TA on BTC and ETH. Nothing that crazy to date from my side. Just playing the classic support and resistance. So I'm longing each time we came to this green circles. I nearly got stopped on BTC from this massive drop that we had here, but you know, I got my stop loss somewhere around 64,000. So I'm still on this long position, and I'm looking forward to see Bitcoin at 72K very soon. But it could go sideways for a bit, you know. I literally thought that it was gonna drop, but as I'm not stopped, I will remain to be on my position unless I get stopped around here. So I am expecting Bitcoin to hit 72K soon. I'm not sure if it's gonna be today or tomorrow. And yeah, I think it's a lot of, you know, a lot of things going on the Bitcoin at this moment with the halving coming as well. So I don't really expect to drop right now, but maybe in the next 2 weeks, let's see what's going to happen. And Ethereum, it's on the same scene. I got stopped once and I'm not trading Ethereum at the moment, but if you want to trade, it is an interesting opportunity inside support and resistance, but nothing crazy at the moment. So yeah, I'm just waiting on BTC to see what to do next. And yeah, that's pretty much for my side today, because I'm a little bit down this week, but I'll be back on fire.
Great stuff, BitBlonde. We appreciate you joining despite feeling slightly under the weather. For those of you who are not aware, that indicator on the chart right now is the 200 exponential moving average. Now, what this is essentially an average of the closing price of the last 200 candles. This is then aggregated and then plotted on the chart. So, of course, when it comes to technical analysis, everything is certainly mathematical. Okay, great. I'm going to go into my section here. Just going to start sharing my screen.
Thank you.
That's all good. Thanks a lot, BitBlonde. Okay, here we go. Here we go. First thing I'm going to do, let's go on to Bitcoin. Actually, before we even go on to the Bitcoin chart, let's go on to Claude, because I want to go from the very basics here and I want to do it as quickly as possible. So the first thing we're going to do is we're going to ask Claude, an LLM, right, Actually, this is much better than ChatGPT because it has a larger token window. You can put more text into it. And we're simply going to ask, please. Also, 1 second. That's right. Please explain the 4 types, or let's say concisely, right? Because sometimes this can go on and on. I always like to put the adverb concisely before all my prompts just to shorten everything down. Concisely explain the 4 types of technical analysis, right? And I'll go into some detail as to why these are useful. Okay, concisely explain the 4 types of technical analysis, providing examples, providing at least 3 examples of each, right? So there are only 4 forms of technical analysis, and this is a good structure you can use to approach the markets. Before I even go into this prompt, with regards to how we even approach any asset class, it all starts off with narrative, which is a story. As humans, we understand the world through stories. Narrative informs macroeconomic policies. How is the US relating to China or Russia, right? That informs fundamentals. What is the fundamental value of, let's say, Apple as a stock? Well, I'm using my MacBook right now to host this webinar, so we know there's some value there. Fundamental analysis informs sentimental analysis, how people feel, right? Now, this takes the longest to develop, but can be instinctual and can be used for probabilistic results. And after that, you have technical analysis, which is used for the utmost levels of precision. So now we understand exactly how we approach all asset classes, right? Let's get into this. Furthermore, Claude is a free LLM. You can sign up just with your Gmail, and I would highly recommend you all use this to learn absolutely anything in the world. So concisely explain the 4 types of technical analysis, providing at least 3 examples of each. Okay, great. Let's see what this is going to give us. So here are the 4 main types. So there's trend analysis, right? You know what they say in this game, the trend is your friend. You follow the trend and ideally you'll be rich in the end. I'm not a poet, but yeah, I think that was all right for something just off the top of my head. So we have moving averages, we have trend lines, and we have channels. Okay. We have pattern analysis, right? And we have momentum and volume, okay? So pattern analysis, you could potentially also call this volatility. So that's also a main one, right? How volatile is it? So the trend is quite simple, right? We look at Bitcoin here on the 4-hour. Okay, here's a trend. I can see a trend. A trend is essentially a straight line touching a minimum of 2, but ideally 3 or more points, right? We've got a few points here, a few touches right here. There's a touch. There's a touch. There's a touch. There's a touch, right? So this is how we know this is a sufficient trend. We have at least 2. In fact, we have 4, right? Okay, so let's keep it moving. We have pattern analysis, right? Candlestick patterns, chart patterns, Fibonacci retracements, and extensions. Now, this could also extend to volatility measurements, right? Volatility is, of course, the range in which price is going, right? And potentially also the time frame in which it's doing it in. So it can be very volatile in a short space of time. And you can use indicators such as Bollinger Bands. Let me just quickly go here into the Bollinger Bands. Bollinger Bands, right? Got Bollinger Bands right here. Now, this is a measurement of volatility. There's a mathematical equation used to basically plot these Bollinger Bands. But what you need to know is this. 80% of price action occurs within the Bollinger Bands, and periods of low volatility, like here, are followed by periods of high volatility and vice versa, right? Okay, important things to note about Bollinger Bands. Momentum indicators. These are actually the leading indicators. These are the #1 form of indicators. And why is this? Well, it's a fact of nature that if an object can only go in 2 directions, in order for it to change directions, it must first come to a halt. If you imagine a car that can only go forwards or backwards, if it's going to change directions, it must first come to a standstill, even if that is just for half of a microsecond. But this is what momentum indicators allow us to measure. Price, of course, follows those boundaries. It can only go in 2 directions, which are up or down. And in order for it to change directions, it must first decelerate or reduce the rate of acceleration. Cool. This is why this is a very valuable indicator. So if we go on to, let's say, one of the most common momentum indicators, personal favorite of mine, the RSI, you can see here, when price is above 70, it's known as overbought. And when it's below, it's known as oversold, right? So when it's oversold, that means you can see that people have sold this well below its actual true value. And you can see the momentum to the downside reducing. And guess what? That means it's likely to change direction, as you can see here. Okay. And lastly, we have volume. Now, volume is wonderful because volume allows us to catch the big moves, right? Ideally, if you can calibrate momentum and volume, then you should be able to capture the move you're looking for and capture the most volatile aspects of the move, right? So you don't necessarily have to get in right at the start, but you can get in when it's going to do the biggest boom in the shortest space of time. Okay, great. Now we have understanding of the 4 forms of technical indicators. I'm going to go into an absolute fundamental aspect of it, which is basically how you should view the charts. So when it comes to technical analysis, there are 2 main things that we should know. And those 2 words, right, are called support and resistance. I'm going to make this a bit bigger. So we've got support and we've got resistance. Now,
Sorry to interrupt you, Jay.
that's all right.
Now, when you finish, can I just contribute something? There's something I want to add as well to the trading. I want to share something with you guys as well.
Absolutely, Dubum. This is exactly what we're here for, you know. The key to stay ahead is to be well informed and connected.
I want to share something with you. I want to contribute something to you with you as well. And it's in line with Fibonacci. But yeah, when you're done, there's something I want to share with you guys. I want to let you know something.
Nice one. I appreciate the enthusiasm. So support, see, let me flip this around. Support is actually the floor and resistance is the ceiling. So the thing about support is this: when price comes down, at one point, there are people who want to buy it because it's cheap, right? So support is the floor, and support is where there are more buyers than sellers, or at least the amount of capital going into buys is greater than the amount of capital going into sells, right? Now, what this means is this is a good place to place an entry. Now, the absolute fundamental bit of knowledge that you need to know is that a region that was previously used as support is, guess what, likely to be used as support again. And this is the absolute basic fundamental aspect of technical analysis. Okay, let's zoom in on this chart. That was Bitcoin on the daily. Now we're on Bitcoin on the 4-hour. Okay, we can see around this region, what happened? Price came down, but then it went back up. Now, what does that mean? It means when it goes back down to somewhere around here, it's likely to go back up again, right? It's simple as that. So here we can see it happened also once again, right? So here's one use of support. Here's another use of support. And here was just a little touch here. Colin? Yeah, I think that's just a little too loud, please. That's all right. No worries. So you can see here, we've got 1, 2, 3 touches of support. Okay, cool. Now let's find some resistance. Now, resistance is the ceiling, right? Where price was essentially bought up too much, according to the market, and it wasn't actually perceived to be as valuable within that given time frame, of course. So what happened here? Price went up to this region, and then people thought, no, that's way too much. Bitcoin is not worth $72,000. And then they sold a bit. And then they were considering, is it worth 68,000? Enough people had enough money to say, yeah, it is. But then by the time it got up here to about 73,000, similar region to 72, people were like, no, it's back up there again. It's way too expensive. And then people started selling, or people started taking their profits, those who bought here. Because at the end of the day, you got to take profits eventually. You'll never go broke taking profits. So people thought this is way too expensive, and then they kept selling. Now, as you can see, when price came back up to this region of resistance once again, the exact same thing happened, right? You can see here, people thought, no, this is way too expensive for Bitcoin. It's not worth that much. And there was enough capital to actually cause this price action. So this is the absolute fundamental of technical analysis. Yes, Dubum, what were you going to say?
Yeah, there's something I want to mention. Yeah, so I don't know if you guys heard of swing failure pattern.
Say that again. What kind of pattern?
Swing failure pattern.
Swing failure pattern. No, I haven't.
Yeah. Could you give me a favor? If you go on your screen, yeah, could you go maybe if you type in Matic on TradingView and I can show you what happened? Like maybe if you go on a 5 minute time frame and I can show you what happened.
That's Matic.
Yeah.
Okay,
So you
Polygon
can
on the
see.
5 minute.
Yeah, 5 minute, yeah.
Okay, let's look at this. Let's look at this puppy. Sweet.
I want to show you something that happened that I got in a trade, yeah. So do you notice like, yeah, do you notice, yeah, exactly. Do you notice the high, yeah? Do you notice like we were high up, like we were on the other side, we were overbought. Then you see how the price came down. Then you see that big green candle.
Yeah, so you're saying, oops, oh, sorry, we're overbought. You mean this?
Yeah, you see that big green candle that took people out. That literally was done to stop people out. And then notice what happened. It just started dropping. So I managed to short it after that green candle, and literally as well. That green candle was in line. You know, with the Fibonacci that you know the Fibonacci pattern script. It was at the kill zone. That green candle was literally at the kill zone. So that's what gave me more confidence to enter the short. But that's like a swing the pattern. So you see that like anytime we're way overbought, like we've got a high, we're coming down, so people get in. Then most of these man, you know that green candle where you should put, a lot of these guys would have been stopped out. So a bunch of guys would have either been liquidated or stopped out. They would have just been stopped out completely, like because people would have had people to put their stop losses, they get stopped out, and then before they stop people out, it just comes back down. So if you ever see something like that, that's a swing failure pattern. And like also you were saying as well, like even with that green candle, a lot of people would have just FOMO'd into the long, but you see that I would never FOMO'd in the long like that. A lot of guys I would have been taken out as well. Those guys that were chasing the pump thinking it's going to keep going up, nah, that's a swing failure pattern. So if you see something like that, yeah, you get, if you're trading, you get winnable trades like that. It's a very good win rate, and it's literally lines with the RSI. So you'll see the swing failure pattern. If you notice, so you see how everything's overbought. So that's how I knew that even when we got to have that big green candle, there's no way we can keep going up because of the RSIs overbought. So I feel that green candle was done there just to stop people out, those that shorted originally, and also to shake out the late longs. So yeah, have a look at that, Bob. Yeah, but you'll figure you'll pick it up though, the pattern. But does it like kind of make sense? Does it kind of thing?
Absolutely, that makes complete sense, and that was exceptional analysis. Thank you, Dubum. That makes a lot of sense. In fact, so much so, I would like to get that. I'm gonna copy this image. Beauty of Claude is you can basically just copy images or PDFs and just extract all the information. Basically, the quickest way to train any large language model on any data set you would like. I've just pasted this image, and I will say, explain the, what was it called? It was a swing failure
pattern. Yeah,
right?
swing failure
Explain
pattern.
the swing failure pattern using the attached image as an example. Let's see what we get. That makes a lot of sense. Okay, so
it actually shows it. Oh,
yeah, I copied and pasted the image. I literally, for those of you, and this is such an easy thing you can do. You guys, I mean, you guys can literally learn all of this on your own, pretty much. Like, just
if you can spot these stuff, you can get some powerful trades. You can really be profitable with these trades.
Here we are. We're giving away the source. So literally, you can just go on your trading view, go into the top right, copy the image, literally Command V or Control V, and then
what does that say? The chart up here. Oh,
let's see. Let's read this. Let's read this out. So the chart appears to show a swing trade failure pattern. So this is the chart, right? The one we got just here. Okay. It appears to show a swing failure pattern, which is a technical analysis pattern that can signal a potential trend reversal. Here's how it manifests in the provided image, right? In fact, what I will do is let's get these both up, and I will just get them side by side like so we can constantly see exactly what we are referring to. Just get that here like this, zoom out here a bit. Okay, cool. So you guys should be able to see on the right, we've got the chart itself. Okay, so initial uptrend. The chart initially shows an uptrend depicted by the green candles sticks forming higher highs and higher lows, right? If we go into an even lower term time frame, well, actually, I think it's just here, it's referring to this. So an uptrend, how do we know it's an uptrend? Okay, look, we can see there are at least 2 touches, right? This is the initial uptrend being shown, right? And remember, we've just learned a trend has at least 2, ideally 3, but at least 2 touches, okay? That's how you form your trends. Very rudimentary stuff. Let's go again. That's first touch, here's a second touch. Brilliant. Swing high. The uptrend culminates in a swing high, shown here. I'm literally gonna draw out absolutely everything for you all. So here's the swing high, right? Marked by the red circle. Oh, okay, nice. It's even referring to my to my drawings, where the price makes a new high but fails to continue the upward momentum, right? Momentum indicator, RSI, one of the four, right, forms of technical indicators, and the fastest, the one that gives us the earliest indication as to when and where to pull the trigger. Downward retracement. After the swing high, the price begins to retrace downwards, forming a downtrend represented by the red candlesticks. Swing low failure. The downtrend attempts to establish a new swing low marked by the green circles, right? Marked by, wait, let's see. Green circle, but the price fails to make a new low and instead reverses direction. Okay, so potential trend reversal. The failure to make a new swing low after the downtrend can signal a potential reversal where the previous uptrend may resume or a new uptrend may begin. Now, one important thing to remember, guys, and to know is that support often turns into resistance. What does that mean? What was once the floor can now become the ceiling. Right?
Yeah.
So let me find an example of this somewhere over here.
And resistance can also flip into support when we break resistance.
Precisely.
That's why sometimes if I don't win on my trades, if I see things like that, I just get out of the trade. If I'm trying to short it, I just take the L.
Absolutely.
Sometimes.
Yeah, it's better to cut your losses at a reasonable time if you know that trade isn't going in your favor. I'm just looking for an example of when wow, Matic is actually it looks like quite a nice asset to trade. Well, I mean,
you should try it. It moves. The way it moves.
I know that's your specialty. I know that's pretty much all you trade, Dubham. Yeah, which is great. If you know a particular asset, and you can hone down on it and get probabilistic results, then absolutely it should be done. Okay, cool. So we can see here, right? Here's an example of what was support turning into resistance. So here we've got a region of support. I'm going to turn this green because this is a floor that we can use that could have been used as a buy signal, right? Let me go on to this, turn it green, like so. Okay, cool. So this was previous support. And let's look at what happened. So once the support was broken, it became difficult to actually go past it again, right? Let's get this region here. And as you can see, this support became resistance. Because when price tried to go past it, guess what? It couldn't, at least not initially. Eventually it got there, but it was a period of reversal, right? So this proves, well, this and many other examples that you'll find everywhere on multiple timeframes, on multiple assets in pretty much every single asset class, that support has a habit of turning into resistance when broken, and resistance has a habit of turning into support when broken. Okay. Now, that was really good. Cool. So the swing failure pattern is considered a potential bullish reversal signal when it occurs after a downtrend as seen in the image. However, it's important to note that this pattern should be confirmed by other technical indicators or price action before acting on it. I think now is a good time to speak on the concept of confluence. In fact, I'm going to let Claude do some of this. So explain confluence to me like I'm 18 years old. And this is also a tactic I like to employ whenever I'm learning anything. I just go for 18 because here in the UK, that's the age you become an adult. So I figure that's a good benchmark. But also, if you, let's say, are interested in developing your knowledge, you could just increase the number 18, 19, 20, 21. And there you have an entire course you can create thanks to AI, or more specifically, a large language model, which is an artificial intelligence you can interact with using text. Explain confluence to me in the realm of technical analysis. Explain confluence in the realm of technical analysis to me like I'm 18 years old. Let's see what this is going to tell us. Get rid of this now. I'll put this back over here. Cool. Let's see what we got. Sure. Let me break it down for you in a way that's easy to understand. Imagine you're trying to decide whether to ask someone out on a date. Interesting. You wouldn't rely on one single sign or signal, right? That would be pretty risky. Instead, you'd probably look for multiple positive signs or confluence of factors before making your move. This is very fascinating because one of my catchphrases is that, you know, the human animal typically does things for multiple reasons, and whatever reason they tell you is simply an indication of how they want you to perceive them. And this is precisely what confluence indicates, right? It's the same idea in technical analysis. Confluence means looking for multiple indicators, multiple reasons or patterns that are all pointing in the same direction before making a trading decision. So it's sort of like even witnessing and analyzing body language. You don't look for singular occurrences, you look for clusters, right? That all point to the same thing with regards to someone's body language. It's the same idea in technical analysis, blah, blah, blah. I've just read that. For example, let's say you're analyzing a stock chart or a crypto chart or any kind of chart, gold, forex, commodities. The price is above the 50-day moving average, a bullish signal, right? Let me just explain what the 50-day moving average is. You saw earlier, BitBlonde was using the 200-day moving average. We're going to go here into the 50-day moving average. Actually, what I'll do is I'll just pull up this 1020 and I'll actually just change the 10 to actually be 50, right? So this will be 50 instead. And I will change the, and I'll just turn this 20 off. All right, cool. So this blue line you can see here, that's, let's go on a higher time frame. This is basically a line plotted. And as you can see, it can be quite a useful indication of when to buy, right? Or when price is bullish. So when the chart, right? Let's see what we're saying here. In fact, I'll just go back to this so we can see it both at the same time. Right? We can see here, Claude has told us when price is above the 50-day moving average, in this case, this blue line, right? It's a bullish signal. Bullish meaning up, bearish means down, right? So you can see here, this is quite a bullish signal. I'm going to get rid of this RSI, make some space. Okay, the RSI is showing oversold levels, right? In fact, let me get that RSI back, seeing as it's mentioned it now. RSI. Cool. Okay. The RSI is showing oversold levels, another bullish signal, right? Really and truly, oversold is anything above 50, right? But if it's above 50 and below 70, that means it's oversold, but it's still got significant bullish momentum. When it gets above 70, that means the bullish momentum has started to wane. Okay, number 3, there is a bullish candlestick pattern forming, yet another bullish signal. With all 3 of these factors lining up and pointing in the same bullish direction, you'd have a strong confluence of evidence suggesting that now might be a good time to buy that stock. On the other hand, if you only had one of those bullish signals, but the other indicators were neutral or bearish, the confluence wouldn't be there, and the trading signal would be weaker. Experienced traders look for this confluence or convergence of multiple technical factors before pulling the trigger on a trade. It's all about increasing the probability of making a profitable trading decision by having a bunch of different pieces of evidence all pointing in the same way. Does this analogy help explain the concept of confluence in a way that makes sense? Let me know if you need any clarification or have any additional questions. So does this analogy help, guys? Let me know.
Yeah,
That was big time.
What was that, Mark?
amazing. Can you hear me?
Yeah, I can hear you. Thanks. I appreciate that. I hope
Lovely to see you, brother.
Yeah, likewise, man. Yeah, thanks for the support. Really appreciate it. So as you can see here, explained by Claude, we are always looking for confluence, multiple reasons to take that trade, because each reason essentially increases the probability of that trade going in the exact direction that we want. Now I'm going to go into the different forms of support and resistance, because support and resistance manifests in multiple ways. So firstly, you have standard support and resistance, right? Things like this. Let's say we've got this box here. Here's a support. Why is this a support? Because as we can see, price reversed when it was around here before, right? First, price reversed when it was around here. Literally, it wicked on the edge of this box, right? Boom, here's one touch. Here's another touch. And here's another touch. So what happened? When price got to this region, guess what? It went up. So when it goes back into this region, guess what it might do again? It might just go up. And it's literally that simple. Even when it goes back into this again, guess what? It might just go up. But don't think it's always going to go up when it gets back here, because it can go down as well. You need to look for multiple indications that price is still likely to go up. So for example, if we go to the 50, let me just get back to this. It's 1020, and then just go to the settings, get the 20 off, change the 10 to a 50, and boom, here we go. So you can see here, right? Even when price touched this, right? Or rather, even when price touched this, it didn't actually close. It didn't actually close and keep going below. As you can see, it went, there was one candle, let me just zoom in a bit more. There was one candle that was below the 50 moving average. But then we started to receive some bullish momentum, as you can see here. So we were seeing some wicks, right? Price went below, but then guess what? It went back up again, right? Which is an indication that this moving average, which by the way, is just a dynamic form of support and resistance, right? Because as you can see, support, 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 right? Support, it broke here. This was probably another hunt for stop losses. So some people would have maybe put in a long here, they're in profit, they don't take out their profit, and then boom, let's say it hits their stop loss, right? Stop loss is where you'd ask essentially any exchange or market maker to take you out of that trade because you don't want to lose any more money. So as you can see, moving averages, dynamic forms of support, 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 support. There was a little flush here, and then support, support. And then guess what? When it crossed below the moving average, right? The moving average then became, well, it typically becomes resistance. It broke through here, but when it tried to break through here again, guess what? Just got to the moving average, and then it was used as a resistance. And look at this, even right now. It's just touched on this moving average, and it started to come back down, forming a red candle, right? So essentially, moving averages are simply dynamic forms of support and resistance. Now let's go to trend lines. What are trend lines as well?
No.
So let me find an example. Or does anyone have any questions?
Come on. No.
Okay, great. So let's just keep it going. Let me look at an example of what was previously an uptrend that became that became a downtrend, or another example of support turning into resistance. So if we go over here, see, it's this one. I think this could be an example. Right, okay, cool. So I'm going to draw this. I'm going to make this as clear as possible. In fact, I'm going to use two trend lines so you can actually see. And I'll make sure they're color-coded so it's easy to understand. Let's draw another one from here. Right, there we go. Let's make sure this looks like one. So this concept is easily understood and represented visually. Great stuff. So we've got this over here. Now you can see, right, this was a upwards trend line, right? We had how many touches? How many touches is needed for a trend line?
Two,
Three.
right? Three.
Three.
Two is the minimum. Three ideally. Ideally, you want three.
Three
Three is
ideally.
good, right? But you can sort of get away with two, right? But in most cases, you do want three if you want your trade to have a higher probability. Okay, cool. So we've got 1, 2, 3 touches here, which is cool. So we've got this upwards trend line. It gets broken, but guess what? It's just support, this green upwards trend line turning into resistance. Because when it gets back to here, guess what? This is now a form of resistance, right? As you can see. So trend lines are nothing more than angled form of support and resistance, just like moving averages are nothing more than dynamic forms of support and resistance. As you can see here, right? We've got support, 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 right? All the way here, breaks through again, and then it starts using it as resistance, and it's using it as resistance over here again. Is that clear to everyone? Does that make sense?
Yeah.
Welcome to speak or let me know.
Yeah, but I'm probably gonna watch the video again anyway.
Yeah, I think this video, I wanted to go into like absolute fundamentals and basics because really and truly, I feel like complexity is the killer of growth. And this is it's coming from someone who thinks very technically, and I know that my technical thoughts can very quickly get complex. I often have to break them down. So we've got 3 forms of support and resistance that we've explored so far. We've got the typical traditional horizontal forms of support and resistance, which are basically just zones, right? We've got angled forms of support and resistance, which are trend lines, as you can see here, right? So this is support, 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 gets broken, and guess what? Resistance, right? Essentially the ceiling, but it's at an angle. And then we have, what else? We've got dynamic forms of support and resistance. As you can see here, this is support, support, support. Whenever it gets to this blue line, it keeps supporting it. It gets broken, and then guess what? It's resistance now, right? Resistance, 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 and then it gets broken again. So you guys are starting to see and understand what these red and green candles actually mean and how you can use your eyes to decipher them. Because when we're doing technical analysis, essentially all we're doing is we are acting like pattern recognition machines, right? Like literally everything in the entire world is just patterns that we recognize. Even the bridge of your nose is a pattern that does not conform to everything else in the world, and which is why our eyes just subconsciously block it out. But really and truly, it's always there and should always be able to be seen. But because it does not conform to the pattern of the natural world, we literally don't even see it, right? And it's the same thing that you basically have to train your eyes to see certain patterns in these charts. And then once you become a pattern recognition machine, you will be able to take trades with the highest level of probability. Now, before I carry on, does anyone have any questions?
No.
Okay, good stuff. Dubum, you were mentioning fibs. Let's get into fibs because, you know, I do like fibs. So fibs are essentially Fibonacci retracements. Now, Fibonacci is, well, my first introduction to Fibonacci was, well, I think like when I was maybe 10, 11 years old in maths class. Here's a sequence you need to learn. Boom, boom, boom. Okay, it starts off with 1, 1. Elizabeth, I have to jump off. All good. Thanks a lot for letting us know. Very informative. Glad to hear it. Glad you enjoyed it. We've only got 15 minutes left, guys. So Fibonacci is essentially a pattern that is displayed in nature, right, as well. The sequence begins with 1, 1, and then it's simply adding the two previous candles together. Now, I'm not going to go too much into the theory, right? The guy who thought of it, his name is Fibonacci. But how can we actually apply that knowledge and that sequence into trading so that we can, and investing and asset management so that we can make some outsized gains? Well, if you look at this chart, really and truly, one way to look at it is just impulses. So an impulse is a movement and then retracement. And then a retracement is a movement to the other side, right? So there's an impulse and then a retracement. Then an impulse and then a retracement, right? So what Fibonacci's do is they allow us to actually spot where there are high likelihoods of retracements, right? Where a retracement is likely to stop and begin, right? So let's look at this Fibonacci impulse I drew. So the impulse was from here to here, right? Now, of course, there is a level of subjectivity to this, right? Because people will always ask, oh, how did you know to draw it from there? I didn't know. I just made the decision to draw it from there. And then I'm deciding whether this is a confluential factor in my analysis, whether there are other things that support this potential move. Okay, cool. So you can see here, it literally went up to this level and then it came back down to the 702. Now, the first point of interest is the 50% retracement level, essentially halfway. Now, we get to the 50% retracement level when price retraces to half of what its price typical price was. Now, we have this asset here. It was at about 70 cents. We have Matic, and then went up to about just under a cent, right? Now, I'm going to use some numbers just as an example. If an asset starts trading at $0, or more accurately, let's say it starts off at $1, and then there's an impulse that takes it to $2. When it retraces back to $1.50, that's a 50% retracement, right? Because 50% of the price is now lost in that asset, right? Because it's retraced 50% down, right? It went from $1 to $2, impulse of $1, and then it retraced half of that. We lost 50 cents. That's 50% retracement. If it retraced down to, let's say, 1 minus 0.618, right? However many cents that would be a 6 61.8 retracement, right? So this is exactly how it works. So the initial point of interest is the 50% retracement, and then we have the 61.8, and then we have the 70.2, right? And then we have a few other ones as well, which can be interesting points. Like, for example, here, this is quite a useful zone because price often tends to reverse from there. So this is something you can use in conjunction, right? Because remember, we're always after confluence. We never rely on just one singular thing. This is something we can use in conjunction with other confluential factors, other technical indicators, of which there are only really 4, right? Trend, volatility, momentum, and volume. Volatility can also be expressed via candlestick patterns, right? Those are the only 4. So we look for confluential technical indicators, right? But we'll also remember, if we zoom out, technical indicators are for the absolute most specific aspects, right? Once again, going back into asset classes, it all starts off with narrative, because as humans, we understand the world through stories, then macroeconomics, and then fundamentals, then sentimental, and then technical analysis for the utmost precision. So is there anything else anyone else would like to ask or share the last 10 minutes of this stream? I'm going to go, in fact, maybe I should just look at another asset, do some TA on something like Solana. Yeah, Solana's looking good. We're here at the Solana offices, as you can see behind me. Big ups to Solana and Super Team UK. Let me just do I'll just draw some supports and resistance so you guys can see it in action. Here's another zone of support. What happened here? Price went up, it came down, and oh, look at that, it reversed here. So guess what it might do when it gets in this zone again? It might just reverse again. And what might it do if it gets back here again? It might just reverse again. But remember, you don't want to solely rely on support and resistance, right? One thing you can also look for is a break of a trend line, right? Excuse me. So here we've got, right, a few touches on this trend line. Just draw this. And ideally, you want your trend line to touch the wicks, right? Let's get this angled nicely. Yeah, that's more than fine. We've got a few touches here. We got 1, we got 2, we got 3. Cool. So it was going into a zone, right, of support. And guess what happened? It crossed this trend line, right? So, okay, cool. This is potentially sufficient bullish momentum. So this was a downwards trend line, but now it's crossed. It could potentially become a trend line that is used as support, right? And this is the very fundamentals of technical analysis. Of course, we can also use the RSI, so we can see here, okay, not only was it in a region of support, but it was also what? Oversold, right? It's pretty low down here. Right, so yeah, as you can, I think someone's drawing. I'm gonna just stop sharing my screen.
No, it was just me. It was just me.
Oh.
I was showing the breakout. I was showing the breakout.
Yeah.
Oh,
So I
my
wanted to
bad.
see if I could do TA at the same time.
Do you know what it is? It's because I've been on Zoom calls that were open to everyone, and someone immediately starts trolling. So I was like, let's not have that happening. Good stuff. Yeah, please carry on, Mr. Harding. So yeah, as you can see, guys, we had the RSI.
No more drawing from me. No more drawing.
Are you sure? No, you're more than welcome to. I just thought someone was trolling. I've got experience in Zooms where someone's like, yeah, it's an open Zoom, and someone comes in and just starts trolling and enjoying, drawing things. But in any case, yeah, I think that's most of what we need to cover with regards to the absolute fundamentals of technical analysis. My name has been Jeremiah Johnson. Yeah, big ups to Blockchain Sensei and Solana for being able to actually, provide us with a space to run this webinar today. Let me just look into some more assets. Let's see what's doing some interesting stuff. Well, I've looked at Bitcoin and Solana. Let me look at Ethereum. See what Ethereum's doing. Okay, cool. Ethereum's on that trend line. Great stuff. We've got.
Are you live on YouTube as well, Jeremiah?
We are indeed.
Yahoo! That's great.
Great stuff. Yeah, we're live. I believe. Yeah, YouTube, LinkedIn, a few other things as well. So boom, we can see, okay, here's a trend line here, right? This was a trend line that was respected, and look at that. Because of course, trend lines are nothing more than angled forms of support and resistance. You can just see the stuff everywhere after a while, guys. It will become instinctual. You'll become absolute pattern recognition machines, right? Which you already are. However, your pattern recognition capabilities are only limited to the natural world. Once that transpires into charts and technical analysis, then you'll be able to make trades and investments with significantly high levels of probability. Amazing stuff. Gonna stop sharing my screen. Yeah, I'm happy to end it here. If we've got yeah, if everyone's happy with that and understands. Any final questions, guys?
Yeah, Jay, going back to what you've been talking about today.
I'm
apart
gonna
from
say, can
watching
everyone
tonight,
hear me? I don't know if you can hear me.
Oh yeah, there's a bit of a lag, Mr. Harding. Ken just had something to say.
yeah, just what other resources or things can you recommend to, someone, that's learning?
Well, the first thing I would say is understand the asset class you want to trade. Of course, I also offer one-on-ones, but just really do some more research. Literally, you can use Claude.ai.
Yeah, I saw what you were using there.
That's all completely free, especially like ChatGPT, but it's even better and it's completely free. So that's what I would recommend. Yes, Mr. Harding.
I was going to say the thing I would recommend is do some lessons with blockchain sensitive. That's that's the ultimate thing I would recommend to anybody watching. Like, it's all good seeing what we do give out for free, but you have to bear in mind this is free content. There's a lot more depth and nuances to the stuff that we teach for free that obviously has taken us several years to learn and to acquire that knowledge. So that's why we charge for it. So yeah, I would highly recommend those lessons to anybody. And then obviously the dojo calls, which basically we go over all the stuff that we would teach, but in a more intimate setting. And then obviously, yeah, that's what I'd say.
Nice, great stuff. Well, that's everything, guys. I'm gonna end it there. Remember the advice. Get some one-on-ones with Blockchain Sensei, someone in the team. We also have a private dojo calls. Here we go. We also have a private dojo calls for paying subscribers. Got a great community in there. People we've trained up and are now feeding back.
There's a lot of even the free content to get through as well. So I think it's a good place to get learned up on before getting to the other stuff. Definitely.
And all these webinars have been recorded for up to, I think the longest one's been running for 4 years. So there's a lot of homework there for anyone who's really keen on
telling you
initiatives. 4 years worth of homework. You're welcome, guys. Okay, cool. I'm gonna call it there.
Thanks, Jeremiah.
That's all good. Thanks for tuning in, Mark. Thanks for tuning in, Craig. I see you as well.